The number of online brokerage accounts increased 17% from 2019 to 2020. That, according to Piper Sandler. Given the recent trading frenzy, there are new questions about whether retail investors understand market risk and what that might mean for broker-dealers. Joining us is respected Wall Street analyst Rich Repetto, managing director at Piper Sandler. Very good morning to you, Rich. Thanks so much for joining us. I mean, those statistics are stark, of course, for 2020 versus 2019. What's it been like, do we think, in the early part of 2021? That pace has picked up, presumably.
Tremendously, Wilfred. And I just want to point out that those numbers, the 17%, is for Schwab, combined Schwab and Ameritrade. But it's up 3 times the growth rate of what it was the prior year. But one thing I do want to point out, you were talking earlier, you had a media person talking about the commercials last night, in Robinhood's commercials. They, believe it or not, they've been seeing just a tremendous uptick or surge in app downloads even after the trading restrictions. Just, they're averaging probably 3 to 4 times as the amount of app downloads since the trading restrictions have come in. They may not have needed the commercial last night. And I say that, facetiously, because there has been a lot of frustration with the trading restrictions. But again, they're seeing lots of activity on their website, on their app.
And Rich, how much trading are these new account openers doing? And do you expect that to rise, fall, stay steady in the years ahead? And how linked is it to market levels? If we get a pullback, does that kind of destroy people's interest in investing in trading stocks?
I think you hit the nail on the head. Trading right now is super elevated. I'd say the trading for the Schwab's, Ameritrades of the world are 3 to 4 times they were, a year prior to the pandemic. For Robinhood, they haven't posted any new numbers, but here's one number you can get, that can sort of measure that. In the whole market, we used to do 7 billion shares a day. We're averaging 15 billion every day, now, or we're doing 15 billion every day, with a bigger portion being retail. So double, with retail being, a greater percentage, that double in the marketplace.
And so who is making all the money off this, Rich? Is it the sort of more established brokers that may have seen a bit of a pickup in engagement, but not as big a pickup as Robinhood? Or is the Robinhood type business model one that will be profitable both in the short term and be allowed to exist in the long term and be profitable for them over time?
Well, that's a good question, because these e-brokers inspired by Robinhood went to 0 commissions in late 2019. So they actually are seeing some upside, because the volume makeup of the increased volume has made up some of the lost commissions, but they are relying on what we call payment for order flow. And I didn't answer your prior question. Do we intend to, or do I think it'll stay at these levels? I think a conservative person would think that this can't be maintained. But I have been saying this for the last 6 months. And I think you're right. A good market pullback, is a sobering effect. But, all that said, we are running at elevated levels right now.
Do you think, Rich, that Morgan Stanley's acquisition of E-Trade, for example, was a smart one? And do you think others, like Goldman Sachs has been mentioned, or any of the other bigger banks, should be looking to buy Robinhood or start something like this of their own?
I'm not sure about the Robinhood. Robinhood brings in new, young, clients, and they have accomplished what I think their mission was, is making investing available to a whole different generation. I do think it makes big sense that Morgan Stanley bought E-Trade. Parts of E-Trade blended with Morgan Stanley's business. They bring in deposits. Their account growth has been great, and it's a way to bring in deposits. And I think that's what the Goldman Sachs of the world are thinking as well, as, with this frenzy, we can bring in a customer and their money, and then we can potentially sell them other products as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.